The government is coming for dodgy tax advisors, and this time they're bringing the heat. My name is Jack Revis and welcome to this week's episode of Tax Tidbits, where the government has published a new consultation running from the 26th of March to the 7th of May to get opinions on enhancing HMRC's investigation powers. The proposed changes include penalties of up to £50,000, a public name and shame list, and the power to dig deeper into tax advisors' activities if they suspect something fishy. Their goal is to crack down on the small group of rogue agents costing the UK billions of pounds in lost tax. But not everyone is thrilled. Some advisors worry that HMRC may get a little bit too eager with its new powers. For businesses, this could mean stricter compliance expectations and fewer loopholes to exploit. So if your accountant's been a little too creative, now might be the time to double check their work. More than half of job centres are cutting back on support for universal credit claimants because they simply don't have enough work coaches, 2,100 short to be exact. With universal credit claimants jumping to 3 million, job centres are now feeling the squeeze, despite the government's efforts to shuffle around 1,000 staff members like a bad game of musical chairs. Critics argue that this undermines the government's plans to help more disabled people into work, and even though they say that the new digital tools will help claimants, when was the last time a government IT project actually made life easier? With fewer coaches to offer job support, people could struggle to find work, meaning longer periods on benefits and more financial stress for those already feeling the pinch. Big news for savers, your money is about to get a little more disaster-proof. The government plans to raise the savings protection limit from £85,000 to £110,000. This is the amount that your savings are protected up to in the event that your bank or building society collapses. If all goes to plan, this will kick in from December this year and will give people a bit of extra peace of mind. It's being raised in line with inflation as the £85,000 limit was set in 2017, and as we all know, a lot has changed since then. The Financial Services Compensation Scheme will continue to cover deposits per person per institution, meaning joint accounts could see protection rise to £220,000. However, if you've got over £110,000 stashed in one place, first, congrats, but second, you might still want to spread it around just in case things go sideways at your bank. Water bills are about to make a big splash, rising on average by £123 a year from April 1st, like some sort of bad April Fool's joke. The average bill is now hitting £603 a year, with Southern Water bills soaring by a whopping 47%. The increases are largely due to companies raising funds to fix old pipes and clean up their act environmentally. For those looking to save on their water bills, you can try getting a water meter, using less water, or applying for social tariffs if you're on a low income. If you notice your water use is higher than expected, make sure to check for leaks, because that dripping tap won't be doing you any favours. The UK Statistics Agency, the Office for National Statistics, is under the microscope following concerns about the reliability of its data, which plays a huge role in decisions like interest rate changes. The government has brought in a former civil servant to lead an independent review to see if the ONS is really cutting it, particularly when it comes to its job market data, which the Bank of England has slammed for being unreliable. The issues stem from a low response rate to its labour force survey, which has made the bank turn to other data sources to make decisions. This investigation could mean more uncertainty in how future economic decisions will be made, potentially impacting everything from mortgage rates to jobs. And that's a wrap for today's episode of Tax Tidbits. If you found this info useful, don't forget to hit that like button, share this video, and subscribe for more updates. See you next Thursday.